The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host who comes to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we've got the beginnings of some very bearish signs. Of course, options expiration through this week. And let's do this. What would last Wednesday have been? That would have been the 6th. So an 80% probability that on Friday, or 85% probability on Friday that we close over 28.48, which we are under now. So we'll see. It does look like kind of a spurt of bearishness. Options continue to be rather thin. I tried to buy some this morning, and no one would sell them to me. Of course, all they want to do now is sell them to me. So we'll see. Did end up picking up some nice buys just after the lunch hour. They are still on the positive side of the market. Didn't get everything I wanted. Had to go up to the doctors on the way, came back. Felt like a winner at a casino buying gas at $1.42. But what can you say? I got exactly what I wanted, which is the hottest sector and a vehicle in that sector. And we'll see how that works out. But always good, even in the worst of markets, to be looking on the other side when things get kind of ugly. But I don't know, up $1 already. My guess is that it'll do much better, especially over time. I've been trying to get a couple of these stocks that I think are going to do well into the end of the year, regardless of how the rest of the market does. Again, I don't play a lot of indexes like the S&P and NASDAQ. I tend to head more for individual sectors, ETFs, where I have, I think, a much better edge on the market than I have on the others. Did miss one today because I had to go to the doctors. That is kind of bothering me a little bit, but I'll probably get over it. Wanted to get into dust today. I wanted to see the GDXJ close below 42.75. And, of course, it took off like a rocket when I was gone. So I missed that trade. You're always going to miss a few. You still have to do things like live to trade yet another day. So I had to go see the doc real quick. But nothing big, nothing earth-shattering. Just tough to get an appointment these days. They don't want to cram the waiting rooms full of people like they had in the past, like cattle. So actually it was a little bit better. They're a little bit better at making their appointments. At least seems to me that way. So there's a couple other things out here I might want to buy. Again, it is a market of stocks, not really a stock market. But ETFs have kind of made a lot of these stocks go in hand. But, we're off 2%. The volume wasn't all that exciting earlier in the day. We got a little bit more today, 8.3 billion shares, as we start the show on the CBOE consolidated tape. But I don't know. A lot of people throwing rocks at the market and reopening. And You just have to wonder. But somebody asked if there were any contrarians in the den earlier. I said, how can somebody that's a contrarian actually say yes? And that is a kind of a deep thought. But when everybody's looking at their shoes, I think about putting out a giant basket to catch the gold that they are throwing away. And not all the time, but I'm pretty good at buying lows in a lot of these stocks. Not everything works out, but for the most part it does. And I think I posted it in the den earlier today, which is a great saying. Overconfidence starts when you think you're 51% right. No one knows whether they're going to be right or wrong. Your job is to find good trades with excellent risk reward, and then push those trades forward. And let the chips fall where they may. Over time, if you are good at picking, especially individual stocks, it's much better, I think, than owning the indexes where you never know where someone's going to do a drive-by like Chairman Powell this morning and riddle the market with a few bullet holes. But, or, anybody else saying that they're never going to open up the economy ever again. I think that is a lot of well-wishing on people that would like to see a lot of people suffer. Some people really believe it, but some people just a little bit too much glee in people being a little bit downtrodden. I would think that they were not capitalists. Anyway, what else do we have? Did you wear a mask? No, I didn't. I was talking to the doc when I was, or the nurse in there, and I said, what about testing? She said, well, they're closing all the testing sites down around here because no one's showing up to them anymore. We're down to about 1% positives in the tests in this county. And so they're packing them all up and moving them all out. There's still some of those, but not much happening. Anyway, 2817 is the last tick I show. Let's update that just to make sure because the markets are moving quickly. 2816.5. Dow's off 481. NASDAQ's down 175. And volume actually is picking up a little bit. I suspect, and I'm speculating, that we're seeing a little bit of a bear trap. Everybody's going to get bearish. The volume's going to even farther drop out, and we're going to see kind of a nice short squeeze all the way into Memorial Day weekend. I know some will say it's wishful thinking. I think it's prudent speculation. What else is going on out here? That's kind of it. What do we have? Oh, getting ready to do a little history, but we don't have that much time left. First question is, am I bearish gold? Not so much, but the gold miners look very, very brittle here. And just a thought. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as I said, we were out buying today. And so I looked at today's move as a gift. I don't think that we're going to rocket up so much as in the indexes, as probably the strongest stocks will do incredibly well. But we'll get into that in a minute. What I want to do is a little history.
And it's all just a little bit of history repeating.
On this day in 1846, the U.S. Congress overwhelmingly votes in favor of President James Polk's request to declare war on Mexico in a dispute over Texas. After nearly 2 years of fighting, peace was established by the Treaty of Guadalupe Hidalgo. And wasn't that a horse in a movie about a horse? Signed on February 2nd, 1848. The Rio Grande was made the southern boundary of Texas, and California and New Mexico were seceded to the United States. Is there any difference between seceded and ceded? And I'll have to look it up. In return, the United States paid Mexico the sum of $15 million. Agreed to settle all claims of U.S. citizens against Mexico, of which there were a lot of lawsuits since the Mexicans came over and killed a bunch of folks. So over in 1848, and of course, the rest is histoire. And as a son of the native state of Texas, I enjoy some things that others won't, which is the ability to go back to Texas and secede from the country if they all turn into a pack of commies. Hopefully that day never comes. Okay, what else do we have going on? Wanted to get into some charts here. Earlier in the den, I was posting some numbers. I know we always have new folks on the air that come by and start listening. I do keep fairly good track of the short sellers in individual stocks. All that data is publicly available from FINRA each day. And we are looking at, in fact, I showed it in my newsletter this morning, we are at a lot of places where we were right at these trend lines headed higher. Question is, we're going to get anything more than a day or two underneath them. Again, I think if we're going to have some severe downside in the market that extends, it's probably going to be after Memorial Day. This is probably a hiccup. I don't know if we go all the way back to the top. I think we probably close Friday somewhere above 2,900 on the S&P cash. But I haven't been able to look at the options today. They'll be pretty significant as they tend to track in. But again, options have been very thin. Not a lot of market makers wanting to take a lot of risk, so they're not as predictive as they have been in the past. I think it was kind of a shock to a lot of people that the market did go lower. They would have gladly given me their filthy options this morning at 9:35 to 9:40 if they thought the market was going down. They were unwilling to throw them into my basket, which tells me that there's somebody should have been Johnny on the spot to take the money instead of let the market just dive and have to eat the premiums that way. But we got a nice huge spike in the put call ratios today. We'll look and see what that actually ends up being tonight in the put call ratio for the VIX. My guess is it's going to be fairly large. Give you a good indication that we're probably in a bigger trading range and consolidation that will take us, like I said, into Memorial Day weekend. At that point, we'll really look and see whether or not there's a lot of desire to sell the summer. Goodbye for the summer. What was that song? Goodbye for the summer. I think it was a 60s song. Late 60s, maybe? Now it's going to be stuck in my head. Anyway, Sealed with a Kiss. Yes, that is. That's what it was. And it was. But I can't remember. By Highland? Huh. What year was that? Maybe someone will actually know. Everything kind of reminds me of something else. But that would be, see you in next September. Do, 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 do. Maybe that is the song for the summer this year. The stock for the summer song for the stock markets. I'll see you next September. Anyway, Apple came on down. As I said, a lot of people are really going hot over heels to short Apple. I didn't see any real signal in it. The volume's going to be good today, but my guess is everybody's going to short the daylights out of it again. 320, 325 is my guess for Friday. Just way too many shorting, way too many of these big stocks. Take a look at a few others here with Amazon. Just kind of going sideways out here. It's still on this trend line. No real push down in it today. Microsoft was a little weaker earlier in the day. It has broken below kind of the key trend line up in the last few days. Volume has not so much increased so far. We're doing about 30 million shares today. Could it come back to 175-ish? It could. My guess, though, is that we'll probably see buying later in the day. Now, after the bell tonight is one of the reasons why I'm not all that keen on declaring the end of the world and that Armageddon is here once again. Although I think it's only supposed to come once, right? Does it come every year? Seems to. Predictions of Armageddon come every, 3 months or so. Hadn't happened quite yet. But Cisco down a little bit today on lighter volume. But almost all of these stocks that have been in the internet space have done incredibly good on earnings. I would be very surprised to find out that with all the stuff and capacity that's been put on in the last 6-8 weeks, it would be tough to see how Cisco went down. I think maybe the worst of it's already in for today. I don't know if there's a lot of upside, maybe $45. And, of course, they may have just sold everything that they could lay their hands on. We don't know quite yet. It's still, though, I think 45 is probably on the upside. I think we probably have the downside in for today. So that is, I think, right at 405 or 410. So it may have a little effect on the futures, why they're still open till 415. Okay. The happenings. Okay. Yeah, everybody says it's the Highland, the happenings. Okay. We'll figure that one out when I Google it during the break. What else do we have? We were looking at Cisco. Looked at Amazon. What else do we want to? NFLX. See how it weathered the storm today. This is exactly what you kind of want to look at in a double repo pattern. And one of the few stocks that actually is making kind of a bearish sign. Talk more about that when we come.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Sealed with a kiss. 1962. Wow, that was a lot earlier than I thought. But that's it. Anyway, we got back to whatever. I guess where is the support? Is this shorts killing it today, Paul? Back to management again. What's up today is big down with no news at all. I think there was news. I think that was Powell early on. I think about 9 o'clock was basically saying that as soon as the virus's cases start dropping, he's going to pull support. I don't think a lot of people believe it, but we get computer systems now that just read the headlines and one-liners and start selling. And that's a great deal of what it is. And, of course, in thin markets, which we have, it doesn't. Everybody thinks everybody else knows something. So it's fairly easy to get a 1% move in the markets these days. Nothing new. I'm looking for a long-term. Oh, MGM. I still don't see it. I think we talked about this yesterday. Not a big fan of grabbing a hold of stocks that probably aren't going to have a short or a sharp return to business, no matter what you think of the long-term benefits. The short-term, I don't want to buy bleeders. Airlines, casinos, anything that has huge overhead costs. You don't want to buy until you see the big turn. I think even 4 or 8 weeks ago, we were talking about there's a tale of probably 3 different stocks, ones that are going to have V bottoms, ones that are going to have U bottoms, and one that don't make it at all. The U bottoms are probably going to be divided into an early and late bloomers. But for the most part, the market is got the companies that are least involved in the short, in longer term losses. In of course, Amazon, the hero of the pandemic of 2020, delivering things when everybody else was locked up. Apple, people still buying their cell phones. Numbers look pretty good from what you hear from Best Buy, along with televisions and laptops and webcams. But you look at other ones like Netflix, everybody's sitting home. My thought is that the stocks that actually are going to be fairly good shorts are these ones that probably don't have legs after people start going back to work. And that'll probably, slowly, it's not all going to happen at once, but my guess is going to pull back a lot of those stocks. So companies like Logitech that sold a lot of webcams, yeah, are they going to sell them for a little while longer? Yeah. But come next September, it won't be sealed with a kiss. Everybody will have their webcams. They won't need no more stinking webcams. We don't need no stinking badgers. But that is all about that. So Netflix, my thought is, and Disney and the rest of them that are all streamers they aren't making anything. And of course, if they did make something, it would be in California. And the Rice Marshal of California, Governor Newsom, is making sure that every business with a checking account with a positive balance is probably going to go bankrupt. So I'm not a big fan on two sides of the reason for these things. After everybody watches what they got, and of course they got huge amounts of time if they're at home to watch literally everything on Netflix, and even to an extent Amazon. But of course, with Amazon, you're not paying anything significantly more to watch all 5 glorious seasons of Bosch, one of the best shows on television. But there are other things like that. You're not buying a single thing. Netflix is a single stool when it comes to that. So could you be seeing some signs of weakness as people go back to work in Netflix? I think the answer is yes, because guess what? They're probably going to be sick of watching TV and hope for the ability to go home or go to work and not get yelled at by the spouse, significant other. Okay, question about whether I bought a stock. Yeah, you should check your web page. We did buy it, and I said about an hour and a half earlier that where I would want to be buying it earlier than that. So yes, but should you wait? Question here. No, I think you should probably, I'd wait a little while. Got a lot happening out here before the end of the day. You get back down another 50 cents lower, you can still see it. It's there. Yeah, there's one nice thing of buying the strongest sector and stock in a sector, and that is generally you don't have to be all that right at the lows to make some good cash. You can be within $1 or so, and you're going to be fine. And of course, we'll see how that works out. But there's one thing, and that is buying at lows when you've got everything behind you. Now, there's other stocks that maybe are not going to be that good, but if you've got something that was on the outs for a few years, maybe even 3 or 4 or 5 years, and suddenly it starts blowing through previous highs with volume and then pulling back to those breakout areas, just continue buying it. I think it was the 3rd or 4th time we bought this one. I don't know. But done fairly well after we mired through the lows of the market, where we kind of traded maybe 1% or 2 to get a better position in it. But since then, it's been all gravy. So I will continue to be in there. But sometimes, like today, I won't be in front of my computer. But I try to announce my trades before they ever happen. So I gave you kind of where I wanted to be long this thing before we ever sent out the buy on it. Okay. Okay. We did history. Yeah. So we got that out of the way. Someone was missing it. What else do we have going on here? Hopefully I'm answering all the questions. Okay. Yeah, a lot of times, especially in the newsletter stuff, there's a lot more time, a lot of times than you have. Can you look at QDEL? I wonder what this is. Maybe I'm just not recognizing the symbol on it. Okay. Bought instead of sold. Can you look at QDEL? QDEL Corporation profile. What do these guys do that those guys don't do? Diagnostic testing solutions for applications in infectious diseases. I guess the question is, when I'm talking about how they're closing various testing centers down here in Florida, they just don't have people showing up, and we've got less than a 1% positive on the tests. I don't know how good the tests are or which tests they're using. But, I think a lot of these were shots and probably going to pull back somewhat.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And the question is, are we going to say goodbye for the summer and come back next September? I think it's two different songs, but they're mashed up in my head. I can't get them out now like an earwig. On Quidel, nice move higher out here. You did gap up with more volume. You've pulled back. You're probably going to find support in here. Yeah, any kind of testing thing, we probably hit the high on testing. A lot of people have now figured out that it's great if you need to find out if you're sick, but you could test today and get it tomorrow. So probably just making sure that you don't get too close to other folks is probably going to be what we do until we get a vaccine. We shall see. Anyway, my guess would be that you'd probably want to look for this thing to make at least some kind of piercing of the 3x3 displaced moving average or a 9-day moving average before you took any action. My guess is it's just going to go kind of stumble back up around that 210 area. If it doesn't have any volume at that time, it'll probably top out. You've got two really good gaps in this thing. You probably should expect a third. And that's like a lot of these stocks. We've been watching Wayfair and talking about that for a while. You've got two really good gaps up. My guess is you get one more. And since it happens 75% of the time, it's a tough bet to go against. Doesn't mean it always works. There is nothing that always works in the stock market. But my guess is that Wayfair will get one more gap, and that will be the one to pull the ripcord on. If you can find some cheap options, that would be very interesting. I don't know if they'll ever be cheap up there. Something happening in the stock market again? Say no, no, nay, nay, nay. Okay, 804 in the S&P cash, Dow 586 off, and NASDAQ down 201. So we'll keep an eye on how this works out. Okay. Yeah, everything looks fine for me, for the stocks I'm buying. But again, individual stocks or ETFs in individual sectors, not buying the actual S&P 500 or the NASDAQ. I think I have a advantage picking the fastest horse in the group. Okay, anything else out here? Question about looking at Workday. Is that a buy? It kind of broke. Support comes at about 145, so you might have another day to come back in here. I think Workday is going to do extremely well over the coming years. The question is, at what point do we really get more people coming back to work each day? Workday is kind of like Paychex, the rest of them, human resources. They put it all online. You get to use it from your office. You don't have to worry about keeping software updated or taxes or all the other stuff. They do all the work for you. All you do is really kind of a data entry kind of thing when you finally get down to it, because they handle all the other stuff for you. So a great kind of long-term business in the cloud. The question is, down today, not much volume. Could you still get 145? This one's really a mover, and I like thinking that if I was going to play this, I'd go back to the 4th. Is that right? Yeah, the 4th of May. That one at the low was 144.81. 145 was a pretty good guess. Generally, after you do this for a while, you get a few extra ones. See you in September by the Happenings in 1966. No, I'm thinking about 2 songs, but they've been mashed together in my brain, and that is the problem. How do you ever do that? Mashed up 2 things, think it's all there? What else do we have? Genetic medicines with Mylan Pharmaceuticals, MYL. I'm not a big generic fan. Again, the reason to buy biotechs is not buying generics. That is the equivalent of buying a grocery store. Low margins, high risk. New drugs come along. I think you want to be in the specialty drug business. That is ones that with high margins. And then if you buy pharmaceuticals with high margins, and then you can afford to buy those high margin things if you get sick. If you buy the low margins, my guess is you're not going to move that much. Anyway, you got 3 days down on Mylan here, light volume, kind of at the trend line higher. So is it a bad trade? No. I just would like something with more oomph. And that's a technical term. You can look up in the chart encyclopedia of oomph. I could see kind of that. A lot of people taking the standard antibiotics and stuff. It's just there's not a lot of margin there. We talk about semis a lot, and I don't pay a lot of attention to Texas Instruments. That's because what they make is kind of the glue that makes everything else go together. But all that stuff is just low margin stuff. Even if they do well, they're not going to do that much. STOR. Okay. You can give me a call, by the way, at 877-927-6648. Store Capital, STOR. You're down on light volume today. There is kind of a trend line that you could draw back from the March 19th low. Again, I'm not looking at financials. Let's find out what this thing actually does. Internationally managed net lease real estate investment trust. Oh, God. No way am I in REITs. I'm running for shelter. Almost in every one of these big pullbacks from 2008, going all the way back to 1929, a lot of people talk about a lot of the stocks went out of business and stuff, but 75% almost always from every big pullback, you can put the losses in REITs from 1929 on. 75% of the losses in the stock market are almost always in a big, broad pullback in REITs. They are the death of people. I tend to stay away from them. I think they're going to be in problems for a while. V and Q would be your signal on this one. And I don't see a lot here. You kind of had a failure yesterday on volume. Your next attempt at a low would be at 63.27. And again, we kind of rotated through that yesterday. I think a lot of that was Powell foreshadowing what he was going to talk about this morning, which is that he's going to take away our mother's little helpers, our drugs. Going to take away the market drugs. Kind of hinted at that this morning. But, yeah, not a big fan of this. This, you've come back on light volume. You can say that for the V and Q. We'll be back in a
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Okay, what else do we have? Yeah, I got a couple more email questions out here. Yeah, I think a lot of this had to do with options expiration, getting everybody bullish for a while, then get everybody bearish. 2,900, maybe a little higher. I think everybody's gotten fairly bearish here, but Again, way too many people, as far as I can tell, bearish. And generally, you don't get much on the side, even if you're right, when everybody else is bearish. Same thing when you're bullish. When everybody's there, who's left to buy? At the same time, when everybody's bearish, who's there left to sell to? And of course, these people that probably are holding stocks, most of them, I mean, they had it a lot worse and they didn't sell. What makes you think they're going to sell now? Stampede out. The weak hands have already been tossed out. That means the easy money has been tossed out. You may be right. It's just going to take a lot more time, this time, to drive people out. And that means that you get a lot more sharp corrections, even if you're in a bear market, which I'm not satisfied that we are. We may be entering one, but again, I suspect after Memorial Day might tell us a great deal more than what we found out today. So anything else in the emails in the last 30 seconds here today? Just looking at Cisco after the bell, I expect them to be a little bit higher on earnings. All those internet hardware producers have done fairly well as of late. I'd be surprised if Cisco be the one odd man out. It could happen, but I don't think so. So that's it. What we're going to do is see you tomorrow. Same bat channel, same bat time. And remember that you can sell when you can, not when you have to. We'll be back tomorrow, bright and shiny, positive and uplifting, with some positive waves.